Hello, everyone. Good morning, good afternoon, and good evening to you all. And I hope you had a wonderful and fantastic weekend and are ready to kick off a new week with energy and enthusiasm. In fact, I'm very excited to be with you here this morning. I had a blissful weekend for me, and I trust you do the same thing too as well. Before we kickstart the session, let's run through our daily routine just to confirm that we are all on the same page. So if you have logged in and you can see my screen, hear my voice loud and clear without distortion, please let me know in the comment section that things are quite fine on your hand and we can kickstart the session. And if they are not doing too well, please let me know so that I can do the necessary adjustments. So I would like to see your feedbacks in the comment sections. You can just tell me a hi or a hello, a good morning, whatever it is, and I will be fine. Please, I need your feedbacks as it will help me in understanding that we are all on the same page. And thank you very much as you. All right, so let's see what we have here. So I can see a couple of comments from Roy99 to Swing Trade and JCS76, Maita98, Asi Harris, and then we have Aziz, Samot177. All right, guys, thank you very much. I'm here to see Carrie in the room this morning. Okay, so I think with this handful of comments, I will take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you all once again to another promising edition on the Extreme Speed Live technical analysis session, your daily dose of financial insight and trading strategies. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for the new week. Well, in preparation for this week, I have a handful of financial instruments that I did an extensive research on during the course of the week, and I was able to come up with some interesting and simple trading setups that we will be using to guide our decisions for this week. However, considering today being the first trading day of the week, it's an opportunity for you to drop in the comment section any assets you want us to look at, be it cryptocurrency, commodity assets, currency pairs, whatever you have. Let me know in the comment section, and I promise to incorporate it into our plans for this week. For those of you who are joining us for the first time, who are actually wondering what this is all about, well, I do not want you to get too lost as we come here together as technical traders on a daily basis to in preparation of the New York session where we come to review our existing positions and of course see how we can manage them and use the historical data to strategically position ourselves for the next move. The session officially kickstarts about 10 a.m. UTC, 11 a.m. West African time. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And the more time you spend with us in this community, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I do welcome you all on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and it is our culture in this community that we keep tabs with the fundamental factors that is likely going to be influencing the market sentiments today. And as usual, the first thing we normally do is to check on the economic calendar, where we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So, based on the assets we are going to be looking at for this week, I personally have prepared about 5 assets, which includes the USOILSPOT, the USTech100, popularly known as the NASDAQ. We also have, I newly introduced the USDJPY again for this week, and the XAUUSD, popularly known as the gold spot. So, based on the assets we are looking at right now, we shall be focusing on economic features from both the United States and the Japanese economic docket. Now, okay, so for this week, we have seen the Bank of Japan monetary policy report, which actually happened about 12 hours ago, I guess. I think about 12 hours approximately. And this was published. And one of the highlights we were able to come up with from that publication was the acknowledgement that interest rate is gradually reducing, which is bringing some glimmer of hope for buyers of the safe haven Japanese yen, where everyone will be expecting that the Bank of Japan is likely to pivot from their current ultra loose monetary policy anytime soon. Then additionally, the hawkish tone in the meeting observed that the Bank of Japan's is disclosed that the Bank of Japan Board of Members recognize a growing probability of achieving the central bank rate. And then we also add of this Japan's policymaker Masato Kanda, who issued a cautionary statement indicating readiness to implement appropriate measures to counter excessive weakness in the Japanese yen without ruling out any intervention. Now, this is going to be making this current market dynamics more interesting. And in fact, we have a simple trading setup that we will be using to guide our decisions on the USDJPY. So I encourage us all to stay tuned in so you don't miss out on these ideas. Then for today, Monday, March 25th, we do not have any high impactful event to look out for. So what I did here was to include the mid-tier economic features, and when we included that, we have a couple of speeches, one which is coming up in about 2 hours from now, and that is from the Fed's Bostic speech. Bostic is the Federal Reserve Bank of Atlanta president, and is also a member of the FOMC as well, and whatever he says today will be carrying a lot of weight, especially after the FOMC announcement that came in last week. Then we also have Lisa D. Cook, who is a member of the Board of Governors for the Federal Reserve, and she is also a research associate at the National Bureau of Economic Research. And of course, what they will be saying today will be giving us an insight into the Fed's policy decisions, economic outlook, and of course the health of the United States economy today. So this is an event we want to be marking the timing on our calendar so that we can be on standby to capitalize on how the market anticipates or react to the event. Then in about 4 or 5 hours from now, we shall be looking at the new home sales change, which is usually released by the US Census Bureau and is considered to be an important measure of housing market conditions. And we all know how the housing sector is sensitive to the US economy. So, generally, a high reading on this data will indicate a bullish traction in favor of the US dollar, as it will inform us that the housing sector is doing very well, whereas a low reading is going to be considered bearish for the US dollar. And if we look at the previous month here, that is for the month of January, the data came in at a 1.5% expansion. So we will be looking forward to what the actual data will be today. Can it beat the previous month? Let's see what happens. But from last week, we can see that the data churning out from the housing sector in the United States shows a robust one, and we should be expecting something like that to today too. So these are the impactful events we will be looking forward to today, and as technical traders we do understand that the anticipation of this event has a way of influencing the behavioral patterns of market participants in this market, which will reflect on the chart as price action. So as always, we will be looking into the current market dynamics to look out for patterns and structures that we will be using to guide our decisions going forward. So as it is right now, the first asset we are going to be looking at this morning is going to be the US All Spot. And on the US All Spot, first of all, last week was quite a profitable week for us, as we had roller coasters of buys, sells, and the later part of last week we also had the privilege of joining some bullish traction following the inability of sellers to continue the downtrend. So as at the end of last week, we were doing very, very well on this particular asset, scooping in over or close to 500 pips in profit on this particular asset. So congratulations and well done to everyone who stayed faithful with our analytical approach. So as we head into the new week, what is going to be our plans? Are we going to be, let's see if we can have the privilege of replicating what we did last week. But since the new week has begun, we have seen a modest uptick amidst a softer US dollar and a revised demand outlook from the International Energy Agency. Now remember, last week the IEA projected a significantly reduced global oil production for the remainder of the year 2024, following the announcement of OPEC Plus members extending their voluntary production cut through the second quarter of this year. Now, this anticipated drawdown on stockpiles throughout 2024 has the potential to bolster oil prices. Additionally, we also have escalating geopolitical tensions in the Middle East, evidenced by numerous ship rerouting to avoid the Red Sea. And then this has, of course, increased prices by elongating journeys and inflating costs too. And another thing that we would want to also take into consideration after considering these other factors that are supporting the ascent of US All Spot is the weaker economic growth in major economies, which could dampen oil demand, exerting downward pressure on the oil prices. So we cannot ignore these possibilities as well. However, it's important to note that market participants will be keenly awaiting the release of the US GDP for quarter 4 scheduled for Thursday, and projection indicate that annual GDP growth will maintain stability at 3.2% in the fourth quarter. And another thing that we cannot ignore is the Federal Reserve. Remember last week we saw the Federal Reserve maintaining their interest rate at 5.25/5.50% for the 5th consecutive meeting last week. However, any indication of a hawkish stance or the perpetuation of a higher for longer interest rate narrative from the Fed may limit the upside potential of oil prices, as this scenario typically translates to decreased oil demand due to elevated cost. And what do I mean by that? If the value for the US dollar is very high, then considering the fact that the US All Spot is a US dollar denominated asset, then the the price for the US dollar will now become very, very expensive for other currency pairs to convert to before buying the US All Spot. So within this whole market dynamics where we have the possibilities of price dropping and of course rising, how can we use the understanding in the market which will be reflected on the charts to guide our decisions for this week? So our first point of contact on this chart for this week is going to be on the 4 hours time frame. So right here on the 4 hours time frame, after taking into consideration the character of price action since the second half of the month of February, you will see that the market has been a little bit bullish. And after connecting the series of higher lows here, we have a couple of ascending trend line to work with. So I have the first one right here, which is the temporary trend line for me, and then the second one, which is the major one. And as you will see, this is an obvious fact that price action may continue the uptrend situation. In addition to these ascending trend lines are a multiple of levels which I was able to identify here. One of which is the $80 psychological mark, which was serving as a selling niche for a while before we saw the breakout of the structure happened a couple of weeks ago. And then the other level I have here is the highest point price action has been for this year, which is the $83 area. So we saw the rise of price during the second week of this month, breaking out of the $80 mark, as you will see here, testing the all-time high. And it is expected that we could see some profit-taking activities which could reflect on the chart as a retracement move, maybe back into the $80 mark area to retest the structure in an attempt to continue the uptrend move. Now, to guide our decisions for this week, the most important level on this chart is the $81 area. Now, if you look at the $81 level, this level here had played a significant role in determining the direction of price action in the last couple of weeks. You will see here how this level was serving as a selling niche at some point before it was broken to the upside, and for about a week or so, price was maintaining momentum above the structure before it was broken to the downside during the second half of last week. And after the breakdown of the structure, I can see here that sellers are finding it difficult to continue the momentum to the downside. As you will see, as soon as price got into that $80.40 level, we saw buy pressure resume around this area, which for me is looking like price is gradually transitioning into a reversal pattern. And if you look at this reversal pattern here, the neckline of this structure shares a confluence with that key level we have at the $81 area. So all we need today to confirm the bullish possibility in this market is for price to break out of the key level to validate that reversal pattern for us to continue the uptrend move. So that is what we will be looking out for today to join an uptrend continuation. However, in as much as we're looking out for buying opportunities, we will not ignore the potentials that sellers could also come in such a way that it will break down this ascending trend line and the $80 level to join a sell-off to the downside. So we are going to be taking all of this into consideration today. So what we are going to be doing now is to scale back down into our execution time frame, that is the 1 hour time frame, where we want to see how market participants have been reacting to our key level at the $81 area since the beginning of this week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, looking at the structure here on the 1 hour time frame, you will see that the week has started with a range bound structure where price action during the last 8 to 10 hours has been confined within the $81.13 level and the $80.70 area to emphasize the prevailing uncertainty in this particular market, and for the fact that price action is oscillating right around our key level, it makes me feel confident that we are at a crucial juncture in the market where, depending on how market participant reacts to the zone, will determine if we are going to be buying or selling for this week. So with a range bound structure like this, you know how we do it in this community. Whenever we have this kind of structure, we exercise patience, waiting for market participants to make a decision, either in the form of a breakdown of the support line of the range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. And as it is right now, I personally have a buy position triggered after price broke out of the 81 and the $81.13 level to trigger my first buy position for the week. So anywhere above the $81.13 level seems most appropriate to take advantage of buying opportunity, while we look out for more opportunities at the breakout of the $83 area. So it's going to take some time before price action gets into the structure, but pending the time price gets there, I think we have a high here which we can actually use to capitalize on the next move, and that is the $81.70 level. This is another high here, so I would like to give this a different color. So let's give it a navy blue, I guess. Is it navy blue or navy green? That is. So we have the $81.70 level. So if price continues to climb and breaks out of the structure, then we will be adding more buy positions to our existing trade. So that's how we are going to be managing any bullish expectations in this market. So I encourage us all to mark out these levels accordingly on our chart, as we will be needing them to guide our uptrend continuation here. However, if the contrary happens here, and it so happens that we get taken out of our buy position at some point and price action drops below the $80.70 level, then we will be getting ready to sell, for the fact that price action is trading below our key level at the $81 area. Mind you, we do not want to be jumping into a sell position right away due to the inability of sellers breaking down of the structure in the last 2 days in this market, which for me is a sign that this area has a strong memory for buying power. So what we will be looking out for before selling is a breakdown retest of the structure, giving us a confirmation that buyers are finding it difficult to climb back above the key level, welcoming selling opportunities. Then if price drop close to both the ascending trend line and the $80 mark here, we move all stop losses accordingly, as it will now depend on how participants in the market react to this confluence that will determine what we will be doing next. Now, if price finds buy pressure here or any form of reversal pattern, we buy the breakout retest of the neckline to join an uptrend move. But if price drops below the $80 mark, retest structure, then we will be in for more selling opportunities. So this one will be considered only when the $80.70 level is broken down and retested, which at this point it's not looking like it will ever happen. But if it does happen, we want to be on standby to capitalize on that opportunity. So at this point in time, we have a buy position triggered. So let's see how the market is going to play out from here. But I encourage us all to mark out these important levels, as we will be needing them to guide our independent trading decisions for today. So this is my simple view on the US All Spot for today. Let's see how this is going to play out. And if you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next assets on our watch list. Stay tuned in, guys. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the USTech100, popularly known as the Nasdaq. On this asset, we did tremendously well last week. Remember, we were buying at the beginning of the week before we saw the bearish momentum during the later part of the week, which we obviously took advantage of. And in fact, the buy position from last week took us to an all-time high on the US Tech 100, hitting the $18,470 level before this bearish momentum started during the second half of last week. And usually, whenever we have price action get into an all-time area, we know there is this psychological peculiarity that comes up with this development. When price action finds a new high, it usually takes some time before price action acclimatizes to the zone. And this is usually as a result of major key players who had capitalized on that uptrend move. And as soon as price gets into this kind of all-time zone, we see the emotion of fear become prevalent in the market, where market participants begin to think that price may crash from this area because of its unfamiliar territory, and as a result they will start to taking out some positions, that is taking some profits of the chart, and this usually reflect on the chart as consolidation phases, choppy market conditions, and even retracement moves from the all-time high. Now, going into the new week, how do we intend to capitalize on the next move? How are we going to see this week laced with profit-taking activities to incite a sell-off, maybe a retracement move to the downside, or will this old choppy market condition transition into an uptrend continuation that will continue the uptrend from last week? So to guide our decisions for this week, we will be scaling up into the higher time frame so we can have an holistic perspective into what is really going on in this market, at least in the last 6 to 7 months. Now, looking at the structure from an holistic standpoint, it is quite clear that the market is bullish. So while I saw this on the daily time frame, I just what I did here was to acknowledge the strength of the buyers by connecting the series of higher lows, giving us this beautiful ascending trend line to work with. And as long as price remains above our ascending trend line, we obviously want to be looking out for patterns and structures that support the idea of buying. However, like I said at the beginning, you will see that price action is currently trading at an all-time area. As you will see, ever since price action tested this zone since the beginning of this month, we have been seeing consistent selling pressure around this area, serving as a barrier for buyers to continue the momentum to the upside. Now, the inability of buyers to break through this area may make us label this area as a supply zone, as we'll continue to monitor price action around this area to decide what our next line of action will be. So to guide our trading decisions for this week, I was able to identify a key level at the $18,250 area, where depending on how price reacts to this key level will now determine if we are going bullish or bearish. Now, to remind those who are joining us for the first time or those who have forgotten, our key level is always serving as a yardstick to guide our trading activity for the upcoming week. Now, if price trades above the key level, we want to be looking out for patterns and structures that support the idea of buying. But if at any point in time price drops, breaks down the key level, then we'll have to switch our buyers to bearish. Now, with this information we have gathered on the daily time frame, let's scale down to the 4 hours time frame to look out for setups that we will be using to guide our decisions for this week. Now, right here on the 4 hours time frame, I have multiple levels here, and in fact this area between the 18,250 level and the highest point price action has been at the 18,450 has confirmed to us that there is an indecision going on in this market. As you will see, price action has been confined within a range bound structure. And whenever we have a range bound structure like this, we want to exercise patience to wait for either the breakout of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. So this range bound structure can either transition to either an uptrend continuation pattern or a reversal pattern. Now, looking at the structure following that impulsive move into the all-time high here, you will see that after testing the 18,450, price dropped into the 18,250, came back into our key zone area around the 18,250. Okay, it's 18,350, sorry. And you will see that we're beginning to see the possibility of a reversal pattern evolve in the form of a double top structure. And whenever we have a reversal pattern like this, the next thing we want to be doing is to mark out the neckline of that reversal pattern, where the breakdown retest of that structure will validate that reversal pattern, giving us the privilege of joining a bearish move to the downside for about 450 pips if price continues, and more if price breaks down that 17,800 area. Now, since the new week has begun, let's see how the market has been reacting to this key level since the new week began. So to do this, we would like to scale down into the 1 hour time frame where I already have a sell position triggered. So I will zoom into the current structure and look at what I saw this morning on this asset. Though the week started on a bullish note, as you will see, price started around the 18,320, rise to the highest point for this week, which is at the 18,365, before it dropped back into the structure, giving us a range bound trading structure. As you will see here, price confined within the 18,365 and the 18,320 to emphasize the prevailing uncertainty in this market at this point. And you know how we do it whenever we have a range bound structure. We want to see price either break out of the resistance line for an opportunity to buy, or the breakdown of the support line for an opportunity to sell. So I saw the breakdown retest of this structure, which obviously triggered my first sell position for this week, and I'm already with about how many pips in profit right now? About 46 pips in profit. And for those of you who have, based on your experience with us in this community, were able to identify the structure and take advantage of it, well done and kudos to you. But for those of us who missed out on this opportunity, well, there is no cause for alarm. The week is still very early, and in fact, we still have over 4.5 days to take some opportunity from this particular market. So for those of us who had missed out on this opportunity, let's exercise patience and see if the market is going to come back to retest the structure in an attempt to continue the downtrend move. If that is going to be the case, we want to be on standby to capitalize on that move. However, if price does not come back to retest the structure and it continues to drop to the downside, then we are going to be looking at the 18,270 area to continue the downtrend move. So you want to be marking out this level on your chart. So we have the $18,270 level. So let's mark this level out on our chart, and let's see if price will go ahead to break down that structure. And if it does, retest of structure continues the downtrend move to the downside. So this is how we are going to be managing our position here. Price is, we already have a bearish setup unfold on the chart right now. So we remain bearish on this particular asset. And whenever we have series of lower highs, we do want to be connecting the series to give us a descending trend line, which will be serving as a yardstick to guide this trading opportunities going forward. So I would like to thicken this trend line a little bit to emphasize its importance at this point. So I'll give it a red color. So we have this right here. And then, so as long as price action remains below this descending trend line, we shall feel comfortable in our sell position. So we may still see a situation where price could come back, retest this descending trend line, and then if this happens, we want to be joining the bearish move below the 18,320, and then had more at the breakdown of the 18,270. However, if the contrary to the bearish momentum happens here, in such a way that price action goes ahead to break out of that descending trend line, then we shall be getting ready to buy. Remember, we will be having a buy stop order above the 18,365 just in case price continues to the upside here, so we can capitalize on that move. But if a breakout of this descending trend line happens, let's look out for retest of structure, continue buy pressure before joining, and then maximizing that move by joining the breakout of the 18,365 level. So this is my simple view on the US Tech 100 for today. So we have a bearish position at this point, and for those who missed out, I did mention that let's see if the market will give us a second chance as a retest of the 18,320 or that descending trend line to join the downtrend continuation. And if price breaks out of the structure, then we want to start considering buying this asset. So I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the US Tech 100. If you have any questions, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. See you soon. Helmio Somi, good morning to you. How are you doing today? Trust you had a good weekend. All right, so in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the USDJPY. So the last time we traded this asset was about 4 to 5 weeks ago. Remember, we were trading the GBP USD at some point after we dropped the USDJPY due to the uncertainty that gripped the market following the fear of the Bank of Japan's intervention at that point in time. Now, going into the new week, I'm beginning to see some interesting trading setup unfold on this chart, and I'm of the opinion that we should include it into our watch list for this week and see if we can capitalize on a significant move this week. So since the inception of the new trading week, the Japanese yen has sustained notable buying pressure amidst the concerns over Japan's potential intervention in the foreign exchange market, which was triggered by the currency pairs surging to a fresh year-to-date high around the 51.865 level, as you will see here. Additionally, the hawkish tone observed in the Bank of Japan's January minute, which was published this morning, has also contributed to the downward trajectory that has gripped this USDJPY this morning. This minute disclosed that the Bank of Japan board's members have recognized a growing probability of achieving the central bank's inflation target at a gradual pace. Furthermore, deliberations among members revolved around potential measures to be taken if a positive correlation between wages and inflation is confirmed. In fact, some policymakers acknowledge a reduction in the risk of inflation surpassing expectation. Now, in light of this recent development, the Japanese yen could find support from these factors and, of course, the possibility of Forex intervention with this recent speech by Masato Kanda, who is a prominent currency diplomat in Japan, issuing a cautionary statement indicating readiness to implement appropriate measures to counter excessive weakness in the Japanese yen. So with this being said, and considering the US dollar experiencing a decline despite the uptick in US Treasury bond yield, how do we intend to navigate this current market dynamics for this week? So to guide our trading decisions for this week, I started my analysis on the daily time frame. And here on the daily time frame, what I did was to consider the character of price action since the month of December. That's an historical data of about 4 months, I think, 4 months exactly. And it's obvious that price action has been bullish ever since it tested this low at the 140.720 during the later part of last year's trading session. And to emphasize the strength of the buyers, you can see price this ascending trend line here after connecting the series of higher lows. However, despite the strong bullish momentum in the last 3 to 4 months, it is quite obvious that as soon as price tested that 151.750 zone, we have seen some selling pressure emerge from that area. And in fact, if we go to as far back as the month of November of last year, you will see that this same area was also serving as a strong selling niche, as every attempt by the buyers to break out of the structure was met with stiff resistance from the sellers. Now, the last couple of days we've seen continued selling pressure around the 151.750 again, which begs the question that will selling pressure persist one more time, which could be a retracement of this impulsive move, maybe back into either the ascending trend line or the 149.00 area to incite an uptrend move, or even break down the structure to incite a sell-off. And if we look at the distance between where price action is right now and this structure, we are looking at between 180 pips to about 250 pips if price drops into this area. So we do want to be on standby to capitalize on any bearish move if it ever happens. And we cannot ignore the possibility that price could break out of the 151.750 at least for the first time in the last 4 months or so, to incite an uptrend continuation. So this area here is going to be playing a major role in helping us to guide our trading decision, which is subject to how market participants react to the zone. So scaling down into the 4 hours time frame, where we shall be looking out for structures and patterns that we will be using. Okay, hold on a second. I guess we're having some internet issues here. Positions here. So this is what I'm looking at on the higher time frame from the USDJPY. Now, to guide our decisions going into the new week, we want to see how the market is going to be reacting to our key level at the 151.2. Now, scaling down into the 1 hour time frame, things become a little bit more interesting, as you will see here. After taking into consideration the character of price action in the last 10 to 12 hours now, you will see that price action has been confined within the range of the 151.430 and the 151.050 area to emphasize the prevailing uncertainty in this market. And you know how we do it whenever we have this kind of range bound structure. We want to exercise patience and wait for either price breaking out of the resistance line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, this is where it becomes much more interesting. Now, if price action breaks out of the resistance line of that range, then you will see that price action is back above, will be back above that ascending trend line we spotted on the higher time frame, welcoming more buying opportunities at this point. As you will see here. So if price breaks out of the 151.430, then we want to be joining an uptrend move. However, if price action drops below the support line at the 151.050 level, then you will see that price action would have broken down the ascending trend line we identified on the higher time frame, and in fact we have a new trend line here after capturing the pivot high since last week Friday. And if price could drop below both this descending trend line and the support line of that range bound structure at the 151.050 area, we are going to be good to sell, as we will be back within the seller's territory. So it's a simple trading setup we have here on the USDJPY. So I do encourage us all to mark out this level, as our center of focus for today's trading session is basically between the 151.430 and the 151.050 level, where depending on the direction of the breakout will be guiding our trading decisions for today. So this is my simple view on this particular asset for today. So I encourage us all to mark out these levels, as we shall be using them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5 to 10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in, guys. Oh, good morning, Lovo. Good morning to you, Giovanni6127. Trust you guys are doing very, very well out there. So, in the absence of no further questions, I'm of the opinion that we are all on the same page, and it's on this note we shall be moving into the final assets on our watch list for today. So the final asset we are going to be looking at today is going to be my favorite asset amongst them all, which is the XAUUSD, popularly known as the gold spot. And what a phenomenal week we had. The previous week was a very profitable one for us. In fact, the XAUUSD can be considered as the most profitable asset amongst the assets we capitalized on, we took advantage of, we monitored last week. We had the privilege of capitalizing on the bullish momentum following the FOMC announcement into that all-time high, scooping in over 900 pips in profit on that one. And we were also able to capitalize on the rebound as price broke out of this range bound structure on Thursday's trading session, as we rode the bearish move all the way into the 2160, hereby giving us a total for last week at over 1,500 pips in profit on the XAUUSD. So I do want to appreciate every single one of you who was part of this profitable journey, and of course stayed faithful to our analytical approach. So as the new week began, it becomes much more interesting based on the various factors behind the scenes, which is likely going to be influencing the market this week. Well, the commencement of the new week witnessed a rebound in gold prices, recouping some of the losses incurred during the previous week's trading session. Now, this recent resurgence in gold can be attributed to a weakening US dollar, which is influenced by the dovish sentiment surrounding the Federal Reserve stance on the trajectory of interest rates. Remember, market sentiment has been leaning towards the anticipation of interest rate cuts by the Fed Reserve, potentially commencing as early as the month of June. Recent statement from Fed policymakers, and in fact from the Fed chairman himself, indicates that there are going to be continued commitments to reducing interest rate by 3/4 of a percentage point by the end of 2024. That's 75 basis points. So we are looking at 25 basis points each for 3 times, despite the recent spike in inflation. And during last week FOMC announcement, and during the Fed chair's speech in front during the press conference, he highlighted the possibilities of interest rate adjustment in response to unexpected increases in unemployment. And so, in preparation for this week, I'm of the opinion that the upcoming release of the US inflation data, which is poised to have a significant impact on prices of safe haven assets, especially gold, and of course the anticipation of the GDP data and the core personal consumption expenditure, which is the inflation gauge, may offer insight into how to navigate this market. So the anticipation of this high impactful event may likely incite an extended sideways trading activity before a traction begin. Just like last week, remember, before we saw this strong upward move, we saw how price action was trading in a range bound structure between Monday and Wednesday before that move happened. We may likely see the same scenario as major key players step aside, waiting for the announcement of this event before making any investment decisions. Now, to guide our trading activities for today, we are going to be starting our analysis for this week on the 4 hours time frame, which is where I started the analysis. Sorry, I started on the daily time frame, I guess, on the daily time frame. So on the daily time frame here, if you look at the structure closely, after considering the character of price action since October of last year, you will see that price action has been on a bullish momentum, and in fact we have a couple of ascending trend lines to buttress how strong the bias is after connecting the series of higher lows. Now look at what we have here, a couple of trend lines in place. Now, in addition to this trend line, we have our key level for this week, which was broken a couple of weeks ago following this impulsive move to the upside. And in fact, this level at some point in the month of December was a strong selling niche at some point before price action broke out of the structure during the second week of this month. So for me, this 2145 level is going to be our key level for this week, and you know how we use our key level. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying, and we will not be selling unless this key level is broken to the downside. Now, looking at the structure here, let me zoom in. In the last couple of weeks, we have a situation here where price action has been confined within the 2195 level and the 2145 area to emphasize the prevailing uncertainty in this market. Now, this whole range bound structure could transition to either an uptrend continuation pattern or a reversal setup. So we may likely see a situation this week where price, this whole structure could evolve into a flag pattern or an uptrend or a bullish rectangle, where the breakout of the 2195 will be all we need to confirm that price may want to continue the uptrend. However, we will not ignore the possibilities of a retracement phase to happen here, where the breakdown of the 2145 could incite selling opportunities to into either of these ascending trend line, as you will see here. So in order to guide our trading decisions around this range bound structure, I was able to identify a simple setup on the 4 hours time frame. Now on the 4 hours time frame, what I did here was to capture the character of price action in the last couple of weeks, and this is what I was able to come up with. Now looking at the key level, which remains very much intact, you will see that area between the 2160 and the 2145 has been playing a major role in negating all attempt by the sellers to break through this zone. In fact, every attempt by the sellers to break through has been met with strong resistance from the buyers, as you will see here. So with this observation, I'm labeling this area as our demand zone for this week, and it makes a lot of sense. We cannot be considering selling above a demand zone like this. So the only condition that will make us sell this asset is for this demand zone to be broken to the downside, breaking down the 2145 level, and in fact a breakdown will see a situation where price will be back within or below that descending trend line to emphasize the strength of the sellers in this market. But as long as price remains above the demand zone, the 2145 key level, and of course this descending trend line, we obviously want to be looking out for patterns and structures that supports the idea of buying. Now looking at this pattern that was formed here last week, which guided our bullish opportunity, remember we were seeing something like an uptrend continuation pattern following this impulsive move that brought us to this point, remember, and we capitalized on the breakout of that resistant line of that pattern. Now from a technical standpoint, it is expected that price may still come back, retest the structure in an attempt to continue the uptrend move. So with the situation and information we are gathered here on this chart, you would agree with me that we are at a crucial juncture here where, depending on how market participants react to the zone, will determine if we are going upward or going south. Now to guide our decisions for today, we shall be scaling down into the 1 hour time frame to see how market participants have been reacting to that area around the 2160 and 2170 level. Now scaling down into the 1 hour time frame, we'll begin to see things more clearly. Now what I saw this morning was simply this old structure here, as you will see as always, which is peculiar with the XAUUSD first hours of the new week. We see here that price action has been confined within a range between the $2,178.50 level and the $2,164.50 area to emphasize the prevailing uncertainty in this market. And you know how we use our range bound structure. Whenever we identify them on our chart, we exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, in addition to this range bound structure is this descending trend line after capturing the character of price action since last week Thursday, and look at what we have here. Now, if price trades below this descending trend line, well, we will be looking out for selling opportunities at the breakdown retest of the $2,164.50 level. And if price continues to drop, then as soon as it gets into our key level right here, we move all stop losses, secure this position while we look out to see how the market will react to the zone. If buy pressure resumes here, maybe comes in the form of a double bottom structure or any form of reversal pattern, we will be in for buying opportunities, but a breakdown of the 2,145 will welcome more selling opportunities here. However, in as much as things are looking bearish sort of a thing here, the fundamental factors shows us that the path of least resistance for gold seems to be to the upside. Now, in that regard, I want to consider this whole situation here as a platform for new levels to buy. Now, since the beginning of the week, you will see here that sellers have been finding it difficult to break through the $2,164.50 level, which for me is a red flag that sellers may be losing the momentum at this point in time. So with the situation we have here, I have a buy stop order already sitting above the $2,178.50 level to capitalize on the uptrend move. However, a breakout retest of this descending trend line could give us the privilege of joining even before the breakout of the $2,178.50 level happens. So if we have the privilege of seeing a breakout retest of structure, we already have a breakout happen right now, and it appears price retested at some point, but let's see if we can still see a retest of structure. If it does happen and we see that sellers are still finding it difficult to continue the momentum below the $2,164.50 level, then we will be buying around that area, and then look out for more opportunity at the breakout of the $2,178.50, then looking out to add more position at the breakout of the $2,195 level, and of course breakout of the 2023 area, 2223 area. Then there's another thing I would like to emphasize here, that we may see some buying opportunity here. There is another high here at the $2,185.50 level. So we want to be marking that level out so we can maximize the potential of this bullish move if price continues to find new highs. So I'm looking at a breakout retest of the $2,185.50 level to add more buy positions to our existing trade. So let's see how the market will play out from this particular area. And besides that, this level here, this descending trend line that was broken here, I think we still need a level here to help us guide opportunities around that area. So let's use the 2,169 area. So if price comes back to it, we can actually buy right now. 2,169 seems appropriate. And if you're a cautious trader, you may want to wait for the retest to happen before joining. But at this point, it's still looking very bullish here, and making sure your stop loss has enough room way below that support line to protect your positions at this point. So let's look at what happens from here. So we have 2,169, we have 2,178.50 to add more buy positions, and we have the 2,185 and the 2,195 levels, all of which could welcome buying opportunities for us. So this is what we shall be using to navigate this current structure today. And like I said earlier, the only condition that will make us sell is for price to break down and retest the $2,164.50 level. So this is my simple view on the XAUUSD for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide your independent trading decisions. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next how many minutes, 5-10 seconds, to see if there are any questions before we round off on today's trading session. So you can also use that time to mark out these levels accordingly on your chart. All right. Hello, Victor RF, Sabsilane, Sin Amma, Mudak, Sasa, Rosemary's, Andoni, Lovely. Good morning to you all. Glad to have you around with us this morning. So in the absence of no questions, I think we have come to the end of the first edition for this week on the XAUUSD live technical analysis session. And in fact, it has been a wonderful moment with you guys today as we took on 4 financial instruments that we will be monitoring for this week. And so far we were able to take on the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also newly introduced the USDJPY into our watch list, and finally my favorite amongst them all, the XAUUSD, popularly known as the gold spot. And on all of these assets, we were able to understand the current market dynamics after taking into consideration the technical and fundamental perspective. And by the end of the day, we were able to identify simple trading setups that we are going to be using to guide our trading decisions for today. And I do hope we all marked out these levels accordingly as we illustrated during the session. If you had done so, well done and kudos to you. So all we need to do now is exercise patience and wait for the structures to mature. And always remember that every decision we make in the market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to protect your portfolio. For those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information gathered here to enhance your own trading decisions and strategies. So it's on this note, I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing as we prepare for tomorrow's trading session. So it's on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.